Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 2nd, 2021. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks are again at new records, and I think this will continue as shorts get covered, so I'll explain what I mean here. I'll talk about a trade I did on Nokia a little while ago, made just a beautiful amount of money, and right now, I mean, this is really applicable. You gotta know when to hold them, you gotta know when to fold them, and you gotta know when to walk away and know when to run. So Nokia is one of those stocks. I'll show you what I mean. Would be running away from it right now. Actually a while back, but right now for sure. Junk that slightly divergence with the stocks, but I'm not sure yet if this means anything, so we'll need to look at it. Treasury bonds seem to be bottoming, so we'll see if there's going to be a rally. I think dollar will keep pushing higher. This will pressure gold, and I know I had a rally in the past couple of days, but I think this is a what's called a short covering rally. So you know, I think that we're in the bear market for gold, so we'll go from there. And Ethereum again hits new records, and I'll show you how to trade cryptos. I got two more newsletters. One is called Elite, and there we trade ETFs and various large cap stocks. So I'm going to cover that in a separate newsletter for my subscribers. And I have another newsletter called Speculator newsletter, and I'm going to cover all of these stocks in the Speculator newsletter. Alright, let's get right into it without further ado. Very briefly, the lines in the chart you're seeing is green, blue, red, and yellow line. You can obtain them by going to everyonecantrade.com. That's everyonecantrade.com. It will take you to the right place. I also have my website is called Master Trading, but there are most likely going to be a rebranding effort in some future, not so distant future. Very briefly, these are indicators. You can have them for TradingView.com. Okay, so if you have a TradingView account, a free TradingView account, you can have my lines on your chart, and it will help you trade. So how do I use the lines? Let's go back a little bit and look at this S&P 500. So S&P 500, this is daily chart. So very important, I prefer to trade on daily charts. Stocks, I only trade on daily, weekly, or monthly. You know, I don't trade it on like hourly or anything of that nature. Really, very occasionally, I would, just for fun of it, I would get into, you know, trading like on 15 seconds charts or something like that. So yes, you can trade it. So here's, for example, 15 seconds chart of the futures, and I mean, right now it's holiday, but let's just go back to, let's say, this neighborhood. You can see the nice breakouts, and you could have made nice money here. But I don't like to trade too much intraday. I prefer, again, daily charts. And so daily, I'm not sure how else to explain it, but make sure your interval says daily. If you really want to, you can change it to weekly or monthly, but then if you're gonna do that and you're gonna use my indicators, you need to change the length. So let's say you're doing a daily, leave it at 250, but if you go to weekly, make it 52. All right, so very briefly again, you know, why did we decide to start buying stocks back in April of 2020 and not before that? So it is kind of clear on this chart. I mean, I'm making, what I really like is that my charts are pretty clear. What other people appreciate about the charts that I provide are also that it's really simple, you know. You know, I don't have any of those moving averages, and I don't have volume. Notice I don't have volume, and you know why? Because you don't need it really. You know, some people claim to know that to be able to see volume patterns, but I've tried, and it's just not there. You know, there's not really a good volume patterns that I even recommend, bothering with. So the only reason why I use volume is to make sure that it has good options. The bigger the volume, the better the chances that the stock will have good options market. But in this case, there is no need, because all we need is a price. Is the price doing what we want it to do? And yes, it did right there on April 29th of last year, so close to a year ago. The price did what I wanted it to do, and it closed above my support resistance blue line. So when it does that, it is 100% sign to me that we're now in an uptrend. Now, up to this point, up to April 28th here, I wasn't 100% sure what's happening. But once the close above the blue line occurred on April 29th, now I became very sure, and I started buying. And we started buying in S&P 500, ETFs. We started buying into retirement accounts, etc. There was another opportunity where I'm hovering right now on 15th of June of last year, but basically that was it. And why do I say it's an opportunity? Is because this is where I wanted to be buying. I wanted to come down to where I want to buy. I don't want to be chasing the price higher. So when the price came down, this would have been a great opportunity. It touched the blue line where I'm hovering, and it closed above it. Now, I'm not revealing the source code of the lines, but truly you don't really need it, because if you use I'm sharing these indicators with you, blindly without revealing the code. So if you use them indicators, you don't need to really know the code, because it's pretty clear, isn't it? I mean, it's as clear as it gets right there. So if you bought back on April 2020, that's last year, so longer term kind of trades. I prefer longer term trades. I highly recommend people do longer term trends. If you do short term trend trades, then your success rate will be significantly lower. Additionally, your psychology of trading will suffer, because the lower your success rate, the more discouraged you get. Now, unless you have an extremely powerful system where even at very low success rates you will be able to make money, for humans it's more difficult to do that. So if you are a human, I would recommend having higher success rate. My system does 74% success rate. So my personal record right now, and I had made over 400 trades since 2016, end of 2016, and vast majority of them were using these lines, and I have close to 75% success rate. So only 25% of my trades will not work out. On 75% of my trades, I will make at least a little bit of money, you see. So it's important psychologically for people, for humans, and I don't mean just any person. I mean, if you want to get into trading, you will need to deal with your personal way of how do you react to the markets, how do you react to failure, how do you react to success. So all of those psychological issues truly come out once you have some money at stake, you see. And it's hilarious, actually. Some people get completely different personality. Like in life they are one way, and then when they start trading they're just polar opposites. So again, you need to have a good trading system that has high enough success rate for you to be comfortable. Okay, so my system does just that. And right now we're at new records. So, and at the beginning I said that this is likely to continue. So why is it likely to continue? So let's pretend that we are bearish and we know nothing, like we don't have the lines, right? For some reason, let's say back here in late March, 31st or 30th of March, we're like, okay, this is just crazy. It cannot go any further. So yeah, let's say that you have an opportunity to sell short. So, or you can just like open a you know, buy puts, for example. Yeah. So let's say you did that. I'm gonna actually rewind, replay. So I'm gonna replay to here, for example. Let me see. Let's see if I can do that or not. I guess not. All right, anyways. So let's say here on the 30th of March, we're like, okay, this is we cannot go any further higher. So our previous high was right there on the 18th of March. So if we shorted it on the 30th of March, where would we put our stop? So many traders don't understand what is a stop, what is it for? And the stop is to make you aware that any trade will fail, or rather any trade can fail. All right, so listen to what I just said. Any trade can fail. Okay, this includes trades for which you feel very good. This includes trades for which you feel kind of uncomfortable. This includes large position sizes, and it also includes small position sizes. So every single trade that you put on can fail. All right. So this is the reason why people have stop, is that they realize that. Okay. Now, the other question is, will you actually do what your stop is asking you? That is psychology. Okay. So, but let's pretend that you decided to buy puts here or sell short if you have a sophisticated account. You put your stop above the previous high, but lo and behold, the next day the new high was made on 31st of March. So if you are a good trader that is honest, and it will be a good idea to be honest with yourself. If you're honest with yourself, you're like, okay, you know, I just shorted this thing. I am down, you know, a fraction of a percent right now. Shouldn't I just get out because it looks like a new high was just made? And you're like, yes, I should get out. So what does that mean? That means that the stops got covered and the shorts got covered. And in fact, when you cover your short, you have to buy long, right? You have to buy a stock on the market to cover your short position. So if you bought a stock to cover your short position, it would add to the momentum to the upside. And once you cover your stop, the price will slowly start inching higher. So this is what's happening. We had traders that shorted recently covering their shorts. And so we have higher highs and higher new records. So this is what's happening. Is that we were having similar patterns back here. For example, back in January, we had a high on 26th of January. Let's say you shorted it right there. You made a little bit of money, but then you got stopped out. And when you get stopped out, that means you have to buy on an open market to cover your short. So this is what happening. We have sellers covering their shorts, and now we're seeing new highs. So yeah, so this is how it works basically. We have Nasdaq QQQ rapidly approaching on S&P 500, approaching the new records, very close to new records. It's a little bit under pressure again. I think it had to do with Apple. Apple. So Apple kind of weighing a little bit on QQQ. You can see it made a new high on the 25th of January, and so far hasn't made a new high. And QQQ, the Nasdaq, made a high a little bit later in mid-February, and so far hasn't made a new high. So a little bit of downward pressure, but the way it's looking, I think it's gonna make a new record pretty soon. It just looks ripe. Same goes for small caps IWM, and here I wanted to point out a potential head and shoulders. So if you believe in chart patterns, for which I would discourage people from using chart patterns for multiple reasons. Number one reason is, even if you're you learn those chart patterns for many years, they still, you can you see a head and shoulders here? Okay, so head and shoulders, I'm gonna try and mark it and see. So this is the head, and this is the left shoulder, and the right shoulder is being formed as we speak. So the theory goes that once you have a breakdown of this head and shoulder, so in this case we're looking at like 206 for small caps, then this depth of this pattern, so there's the depth of this pattern from the head, it's like 12%, will be duplicated on the downside once it breaks down. So this is the theory, okay? But like I said, I've been trading for, let me see, since 2011, professionally for many years as well, and I can tell you those head and shoulder things, they don't work out vast majority of the time, especially in an uptrending market. So right now we have bull market, so don't worry about them, seriously. Like, the best thing to do is to just not use those chart patterns. Obviously you should be using my lines, because by far, I'm telling you, they're by far the easiest thing to use. So for IWM small caps, this is how I would trade, and this is indeed how we traded. The last opportunity was back in September of last year, and before that, look at those beautiful opportunities on breakouts. So those are the breakouts, and the last opportunity was just a killer, so it made 63% gain. Right now we're bouncing off the weak support, basically. The green line, I would consider it weak support, the blue line is strong support. So right now, let's see where this gets us, and like I said, avoid those head and shoulder things, avoid patterns, basically. It's really difficult to trade that way, honestly. With Dow Jones, not much different. Again, new records just made a couple of days ago. Last opportunity to buy again was back in May, June of 2020. So very clear. You see how I want things to be very clear, and I want you to understand how easy it is to trade if you have a good, clear reference. So this is a reference for you. All right, so here's Nokia. Nokia trade, actually, this is what I did myself, and I want to kind of go back and just explain how I think and how this trade came to be. So Nokia, up to quite recently, and you can see it was really just collapsed. Let me see how much it collapsed. So the last time it was above the support resistance, above the blue line, where I would consider it to be in an uptrend, was back in March of 2019. And then where I'm hovering right now on 25th of April 2019, see it broke below the yellow line. And for stocks, this is all I need to know. If it has closed below the yellow line and has not yet closed above the blue line, it's in a downtrend. Okay, once again, if it has closed below the yellow line but has not yet closed above the blue line, it's in a downtrend. So the downtrend began on 25th of April 2019. Opportunities to sell it short were on a bounce towards the red line. Okay, so there's the opportunity to sell short. Once it touches the red line, that's where you sell it short. There's another one right there. Okay. Another opportunity to sell short, which would have failed, was right there on 16th of April. But I don't know ahead. You see, I cannot know the future. So if I was back here in April of 2020, I'd be like, okay, this looks pretty good to sell short. So I would have shorted it here. And I would have been wrong. Okay. So once that it broke out right there on the 8th of June, this is where I would have been said, okay, this is it. I am wrong, and this is where my stop is. Now I need to cut my losses. So at this point I would have cut my losses, and actually I would have bought it here. And you know, this is a target. So if I, let's say I bought it on June 2020, then I would have made money on August 3rd right there, and I would have closed my position later on. Now the latest trade, again, there are those Redditors and this whole Reddit thing, and I just completely don't look at that stuff. Only after the fact I find out that they even exist. And again, I highly recommend you do absolutely no fundamental research. Zero. Again, I get a lot of flack for this, but my results are just living proof that you truly do not need to know anything about what you're trading. What you do need to know are the following facts. Are you trading on daily charts? Is this a stock? The answer to those are both questions, yes. So it's a Nokia stock, and yes, we're trading on daily or higher, you know, weekly or monthly. Like, I don't want to be trading on 5-minute chart or 1-hour charts, stocks, okay? If it's Forex or commodities or crypto, you can trade it on any chart you want, but for stocks, it has to be on daily or higher. That's just my rule, okay? And like I said, you know, before we were saying, okay, we were in a downtrend, we were selling it short, but on the 8th of June 2020 something happened. Again, I don't know what it is. We can, if you really want to, we can put on earnings. So let's see if the earnings will help us. Okay, so the earnings back right before we would have shorted it were below estimate. Okay, great. Next earnings were hugely below estimate. Yet notice that our trade, which had slightly below estimate earnings, collapsed really strongly, while our trade, which was very close to earnings that were actually even worse than the ones previously, barely budged. You see, this is what's called, there was no reaction on terrible news. But, you know, so this, if you really want to listen to this, this is one of the things you can listen to. Basically, no reaction on terrible news. And if you were short at this time, you'd be like, maybe it's time to get out. Anyways, so if you like to look at the earnings reports, that's fine with me. I think they're kind of useless. So here's another earnings report, and again, well below the estimate. Does it mean anything? No, it doesn't mean anything. So again, avoid looking at those. No need for them, okay? So what happened, you know, a few weeks later? Why did I decide to all of a sudden get into this Nokia thing? And it's pretty violent stock. Notice how much it gaps sometimes against you. Now, if it's below the red line, I don't care. It's like caution to me. The yellow line is where I really worry, and this is my stop. So this is what I did. There's the breakout on second, you know, another signal on the 25th of November. I just kind of waited around, did nothing. Finally, I'm like, okay, this is looking pretty interesting, and I actually bought slightly below the blue line, but the signals were plentiful. There was opportunity, a signal on 25th of November, another on the 8th of December, another on the 15th of December. So I actually I bought, what did I buy? I bought calls. So at that time, this was back on January of 2021, you know, a few months ago, I bought calls that were expiring in July of this year. And I bought them for 31 cents each. So it's actually $31 each, because you have to multiply by 100. So a few days later, it went in my favor. There's that where it went in my favor right there. On the 25th of January, it just kind of gapped in my favor. So I'm already tripled. So it was 31 cents each when I bought them. I sold a quarter at 105. That's it's already 3 times. Okay. Then I'm sitting there, and like all of a sudden there's this just enormous, huge spike. I mean, it went from 470 to like 9, so it doubled. But if you trade options, you will realize that the options they move. They're leveraged, so when they move, they really move. So they moved like a lot. I was able to. I'm like, okay, this is just looking really weird. I want to get out. So this is why I got this little thing here from a famous song. You got to know when to hold them. So at this point, on January 8th, I'm holding it. I gotta know when I'm holding it, and I know exactly when to hold it, because I only hold it when my conditions were met on close above the blue line. Okay. You gotta know when to fold them. So when to fold them, to cut your losses. So I just showed you when to cut your losses. So for example, if you were short back on the 16th of April, then you needed to cut your losses. Well, if you were really paying attention to earnings, and you know, if the news on the terrible news were non-reaction to the stock, then maybe you were able to get out even earlier. But I would have been cutting my losses or folding here on the 8th of June. So this is a from poker. You gotta know when to hold them, you gotta know when to fold them, right? So when to walk away. So at this point, I am thinking about walking away. I already started thinking about walking away on 25th of January. But during this enormous spike, I'm like, I don't know if I want to walk away. I think I want to run away. Okay, so you gotta know when to walk away, and you gotta know when to run. So at this point, I'm like, okay, I'm running away. I'm running away very, in a huge profit, but I'm still running away. Why am I running away? Because these types of spikes, this is abnormal, and it's also, if you read the candlesticks, so this is a candlestick reading. So notice this, a large tail at the top. Okay, so notice how huge it is. It's a very large tail. It is, 3 points long, and the body of the candle, this green little part, is only $1.50, so it's more than twice as long. What does that mean? This means that the price attempted to go higher, but was completely collapsed by the bears. So the bulls really tried to run, non-stop, charging bulls, right? But the bears are like, no way. There's just no way we're gonna, give you this much money. So at like 970, they just shorted it, collapsed it. Okay, so somebody bought puts up here at $9, and I was out. So I was out that day, so I closed the remainder, you see. At this point, I'm like, okay, I'm running away. Okay, so this is, one of those manipulated stocks that Redditors manipulated, but it still works really well as far as price action and as far as finding the levels when to fold them or hold them. Okay. And all right, so I'm out, right? I'm outside looking back in, and I'm looking at this Nokia thing, and look, it's in bear market. So remember, my definition of a bear market is it has closed stocks on daily charts. Okay, definition of bear market for stocks on daily charts. The stock has closed below the yellow line. It has not yet closed above the blue line, right? So if I haven't yet ran away at profit, and for some reason I had the position still open, although psychologically this would be really terrible because I'm breaking my own system. So, but for some reason, let's say I just screwed up and I just did not exit here, I would be out 100% on here on 22nd of March. That's bear market. Okay. So right now it's pretty unequivocally bearish. So yes, we could get a rally, we could get a substantial rally. If we get a substantial rally to, let's say, 560, that's a 40% rally. At that point, it would be an interesting opportunity to think about selling it short or buying puts, you see, because this would be a counter trend rally. It would rally, it would be something like this. It would rally from the lows towards the resistance at the red line, and this is where would we, you know, smart traders would just sell it, collapse it here, short it. So I'm waiting for something of that nature. I mean, I'm not gonna, I don't like to short equity during the general bull market. And how do I know there is a general bull market? So S&P 500 needs to have closed above the blue line. Okay, it has closed above the blue line back in last year and hasn't yet closed below the yellow line. So this is my definition of a bull market, and that's actually all you need to know. Okay, so during the bull market, and I just said what the definition is. During the bull market, I don't want to short stocks. Okay, Nokia is a stock. It's not gold related, so it behaves just like stocks, like normal general equity. Okay, so if this was like a gold stock, gold related, then I would talk about gold first. But we're not talking about gold, we're talking about stocks. So to make the story, you know, relevant to what you're going to be doing is you will eventually learn how stocks behave, and you will have this feeling of when to hold them, when to fold them, and when to walk away and when to run. You see, you will have that feeling. But if you don't have that feeling, just use the lines. Right? It's so easy, so much easier. All right, moving on to junk debt. So right this instant, S&P has made a new record. We got, you know, S&P is at new records. Junk bonds have not made a new record, so a new record is close by. Junk bonds and stocks move together. In other words, if stocks move one way, junk bonds move the same way. So notice we're very similar pattern to what we're seeing last year. Junk bonds broke out even earlier on April 9th, whereas S&P broke out on April 29th. You see the difference? So junk bonds broke out early, and that gave me another clue of why it's not a good idea to sell the market short. So we were absolutely correct. We started buying. If you have longer term positions in like retirement portfolios, I would be just still open. Now we are getting what's called a narrowing of a trading range. So I marked here, so you can see the difference, the distance between the yellow and the green line. In March even, or late March even, it was 17 points, while right this instant the distance is 11.4 points. So what does that tell us? Usually when the trading range, the distance between the lines narrows, what happens is the price will have an easier time of getting to, for example, bearish levels, and bearish levels in this case would be at 94.90 yellow line. So the bearish levels are getting close to current price action. Does it, will it actually do anything? Will it affect the prices somehow? We don't know at this point, so we just need to wait. So the way I'm looking right now is the S&P made a new high. I'm going to turn off for a second. S&P made a new high, so here's S&P. There's the new high, while junk bonds did not. So slight divergence. Is it significant, or does it mean the divergence actually mean anything? We don't know. We need to wait and see if it gets to anything. Okay, so TLT, Treasury Bonds. So this one is currently in the bear market. So Treasury Bonds, I trade them like Forex. So if I'm trading Forex, I use the blue and the red lines. If I'm trading stocks, I use the blue and the yellow lines. So For stocks, if the security has closed above the blue line, hasn't yet closed below the yellow line, bull market. For forex-like instruments, including treasuries are a forex-like instrument in my book. I use the blue and red. So let's say it closes below the red line, I just sell it. I short it right now, right there. In fact, some people from my client service did take this opportunity, made really nice money here. So I think the bottom has been put in, at least intermediate. I think this might be the bottom right there on 18th of March. Very likely we'll see a rally. So I'm looking for a rally at least towards the red line. So we're looking about 7-8% pop from here. Will it actually happen? Again, nobody really knows. We just need to kind of take our bets. And at this point, I would do nothing with this particular security. I would just wait and see. I want to see a bounce, and then we can sell it short, should we even desire. Same goes for IEF, so intermediate bonds, 7 to 10 year bonds, same thing. We just traded that way. So there's the breakdown on the 16th of February, and again, some people actually took it, so congratulations. And here the inverse of the bonds. So this is the yield. This is a 30-year Treasury bond yield that broke out on the 6th of January, and it just kind of kept making new highs and new highs. So there's the new high on the 18th of March. It's very likely that this is the high for the move, and I think we will see a pullback. So on this chart, what I'm looking for is the pullback towards the blue line, and this is where I would be considering selling short treasuries. You see, because it would have bounced by then. And here the 10-year Treasury bond yield, so ETH.X, also nice substantial move since recent breakout. That's a 50% increase in the interest rate, and again, this is affecting things like mortgages. Okay, so switching gears, let's get into dollar index and then gold afterwards. Here's dollar index DXY. So dollar unequivocally bearish, hit a new low on the 6th of January, again, riot, capital rise. So really interesting events were happening, and it looks like this was the low for now on 6th of January. And now we're seeing what appears to be higher highs and higher lows. At the very least, there's the higher low on 25th of February. So this move up, as I kept pointing out, has really caused a lot of pain for precious metals and those who love precious metals. But before we get to the precious metals, I wanted to show this USDJPY trade. So we do trade Forex, and here's how we would have traded it. You can again clearly see the breakout right there on the 5th of March. Once the breakout occurred, I waited a couple of days to send an alert. We sent an alert on the 9th of March, and it was really successful already. So that's a 246 pips move. The initial stop was right there where I'm hovering, but then once you get to the target was like right there. So target was about, let me see, about 100 pips. So 100 pips target right there, and then at that point we moved our stop to the entry. So wherever you entered, and then once the blue line moves up, you just keep trailing it higher at the blue line. So also good opportunity to take some profits. For example, once you get to the point where you have some profits, not a bad idea to take it. So USDJPY is the first currency pair to break out, and we were watching other currency pairs as well. And here's the gold. Here's gold futures. And again, gold futures entered the bear market on 8th of March. Congratulations to all the women out there. This is International Women's Day. So on International Women's Day, I'm not sure if it's the reason for the gold to enter the bear market, but it happened on that day. What was the reason? Anybody has any idea? I don't have any idea. So projecting the price action into the future, or I'm sorry, projecting my indicators into the future. So this is a 6.0 version, which projects into the future. You can see I can turn it off, I can turn it back on. So the price action currently is right there where I'm hovering, and it's projected to continue slightly higher. So in my experience, this type of behavior most likely will result in the security moving higher still, and then touching the red line sometime in the future, and then at that point we'll be thinking again about selling it short. So I am actually short right now, short gold right now, but you can see that it doesn't necessarily, collapse in one day. Right here on the 30th of March, very close, we came super close to a complete collapse, but for some reason we got stopped at the lows here. So let's see if this holds. Again, I'm freely admitting that any trade can fail, and my ideas also fail 25% of the time. However, 75% of the time I'm still right. Okay, so I'm hoping that this is what's going to happen this time, because I am short. Actually, I have money on it. So most likely they'll pop slightly higher, top out, and then collapse. So let's see if this actually happens. Here's XAUUSD. It's very interesting because if we look at XAUUSD, there's the 1st of April, and apparently there was some action for silver on the 2nd of April. So today. So we can look at 1 minute chart and see what happens. So on the 1st of April here at 1940 there was a stop in trading, and then for like 2 minutes for some reason there was trading. So I'm not sure exactly what this is all about. This could be an artifact as well, and it may be adjusted on Monday. Yeah, so I wouldn't necessarily read into it too much. But the reason why I'm not really interested in buying it right now is because I'm thinking that gold is headed lower. So I'm gonna wait with gold and silver. And Ethereum again at new records. So again, congratulations. Not an alert here, but an opportunity to buy on the 28th of February. This is what I'm talking about. We see new highs, and then the price comes down towards the blue line, touches it, and rallies. So this is the type of trades I would call a pullback trade. We come back from the top, and we touch the blue line, and then we rally from there. All right, that's it for this week's recap. Head over to MasterChartsTrading.com. That's MasterChartsTrading.com. You can also go to EveryoneCanTrade.com. Click on products, and I have 3 different levels of service. So if you just want the indicators, and I have the 6.0 indicators that were just released. So for example, Nokia, for example. So actually, let me do XAUUSD, for example. And so this is the 2.0 indicators right now. You can see that they up to current levels. And then if you turn on the future projection, so 6.0 projects into the future, we can see what's it going to be like in the future. And I'm talking about where the lines are going to be in the future. So I like this because now I can kind of at least know where I can put the stop. If I'm projecting into the future, then I know where to put the stop, where the stop will be in the future. So that's the 6.0 version. It projects into the future. Speculator basically has everything, and this is going to be reworked as well. So Speculator will include the new advanced screener at $69.95 per month, and the top level will be more like personal training kind of thing. So if you want to have learn directly from me, so I will give you indicators, I will give you the newsletter, but if you also want to meet over Zoom and I will share my screen with you like I'm doing right now. And some people find it very useful, so it's really up to the way each individual trader learns, and it will be available. So I will update the price on this. But I think the best package is Speculator. Basically, it's everything I have at $70. I think it's a great deal. You will definitely make your money back, but you gotta have at least some amount of cash to play with. Alright, that's it for this week's recap. Again, if you have any questions, let me know. Thanks for watching. Bye-bye.